Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Crypto TV Plus.
Hello and welcome to the program. You're watching Inside Blockchain live on Crypto TV Plus. I am Muthoni Njogu. Now, these are the headlines. Ripple hires 21 lawyers to battle lawsuits against the United States Securities and Exchange Commission. Global Legal Insights publishes Blockchain and Cryptocurrency Regulation 21 for anyone looking to understand the regulatory framework in Kenya. And finally on the program, we'll discuss relationships between crypto and financial institutions. Now let's begin with the story of Ripple and the United States Securities and Exchange Commission, as Ripple hires 21 lawyers to battle their lawsuit against SEC. Now, this case has been a trending topic in the crypto space since the 22nd of December 2020, when Ripple and two executives were charged by SEC with conducting over $1.3 billion unregistered securities offering. Now, according to SEC's complaint, Christian Larsen, the company's co-founder, executive chairman of its board and former CEO, and Bradley Garlinghouse, his current CEO, raised capital through the sale of digital assets known as XRP in an unregistered securities offering to finance the company's business. The complaint also claimed that Larsen and Garlinghouse effected personal unregistered sales of XRP totaling approximately $600 million. This legal suit has affected the value of XRP in the market, as the price of XRP plummeted by 25% and was delisted from significant exchanges like Coinbase, Bitstamp, Warex, Bittrex, and Swipe Wallet. In this regard, 21 lawyers have been hired by Ripple to fight the lawsuit against the U.S. Securities and Exchange Commission. Now, with a newly appointed SEC chairman in Gary Gensler, what does this mean for Ripple and the crypto space in general? We now move to Kenya, where a leading legal outlet, Global Legal Insights, has published a blockchain and cryptocurrency regulation 2021 guide for anyone looking to understand the regulatory framework in Kenya. This free guide highlights and explains the various topics and legal requirements for companies, brands, and entrepreneurs who are operating and looking to operate within the crypto space in the country. Let's now talk to Muthoni Njogu, who is the author of this chapter of the Blockchain and Cryptocurrency Regulation 2021 and also managing partner at Njogu and Associates Advocate. She joins us on Skype from Kenya. Muthoni, good to have you join me on the program. Just a quick one. Now, you wrote in the chapter, right, that the government of Kenya are neither receptive nor to cryptocurrencies, right? Nor do they prohibit them. Why is this so? What is it down to, and how significant is this, do you think?
Good morning. Thank you very much. What I'll say is that when we say a complete prohibition, like what we had seen, I think, in countries like India, we do not have that in Kenya. What we have in Kenya is a government that at one point in time is saying that this is an asset class that can be taxed, but at the same time not agreeing to it as what we call a currency. So when we think about the holy trinity of what a currency is, the government is not agreeable to that. So it is what we call park your car at your own risk. So we are not prohibiting it, but you go ahead and park your car.
Okay, so I like
So
that.
that is the position in Kenya.
Yeah, I like that analogy you used there. Park your car at your own risk. So another topic that caught my attention is the issue of taxation. Yes. Now, we have seen the list of services that are chargeable under the digital service tax. Now, a part sales and any other service provided through a digital means, or let's say, or through a digital service. So my question is, how can this, all right, what does this mean really for crypto entrepreneurs who are operating within the crypto space in Kenya?
So basically what the government is saying, that if you're exchanging goods or services within any electronic means, you will be subject to what we now call the digital tax, which has now been pegged at 1.5%. What we need to understand is that the Kenyan law is not very specific to cryptocurrencies, but because of the way that our laws are completely wide and broad, it enables the government to actually tap into the crypto space. This will, of course, touch on virtual service providers. It will touch on anyone engaging in the Bitcoin space or whichever virtual currency that is. So in essence, the government will be taxing you by the mere fact that you deal in this space in an electronic way, and means you're going to be taxed the 1.5% of the gross transaction value.
Okay, so is there like a system for tracking these transactions?
Yes, the government called it what we call a data-driven detection. Data-driven here being that in Kenya we have what we call mobile money. So we use what we call M-Pesa.
M-Pesa, yes.
M-Pesa is one of the ways that you can be able to transact, as well as use the mobile money from the fiat currency, but also be able to even purchase virtual currency. So the government is looking at that information from a third party, which the third party here is the mobile service provider or M-Pesa. It will be able to net that you have been able to engage in cryptocurrency businesses. As well as if you use payment facilities like Visa, the government will also be able to track you down. Okay. Of course, the repercussions of those are many, because when we talk about data protection, those are issues we probably need to deal with at a later stage in time, but it will come.
Interesting. Now let's look at the topic of ownership and licensing requirements, Muthoni. How are the regulators treating cryptocurrencies, and what are these licensing requirements, if you'd like to provide us a few?
Okay, when we look at licensing and regulations, as we said from the onset, the Kenyan government does not recognize cryptocurrencies as money. So what has happened is we have our Capital Markets Authority, which has been responsible for all the securities in the country. And there have been numerous cases that have come to the fore, and people who wanted to engage in ICOs. So the Capital Markets Authority has designated this as securities. So what we have currently is cryptocurrencies as securities, not as money, not as anything else, but as securities. So when you're engaging in that particular space, you want to, deal with investors' money, you're going to be under the bigger bracket of the Capital Markets Authority Act. And any sanctions that accrue that you have not followed through, of course, now will be pursued to you.
I see. Just before I let you go there, Muthoni, looking at the book, right, that you wrote, especially this chapter, apart from this very, very important or key topics that we've discussed, is there any important parts that we are missing out that you just like to throw out in the open, especially because of those who are currently operating within the crypto space in Kenya and also looking, all right, to bring their business to Kenya?
Okay, I will say, like, now from the perspective of if you're a virtual asset service provider, the laws as well, you will be having the tax accruing to you as well. So there will be tax that if you want to come and invest in our country, just know that there's a tax repercussion to that. But we are welcome to investment. I'll say that again, we have not prohibited at all, and you can come and invest in our country in terms of any cryptocurrency space, as long as it is not involving what we call, we have seen a lot of scams. But if you're offering a legit businesses, this would just be under normal regulation, under tax and securities, etc., etc.
Okay, thank you so much, Muthoni, for joining me on the program.
Thank you so much. Thank you for having me.
Oh, great. Now, still to come, we will be taking a deeper look into the strange relationship between crypto and financial institutions. Will cryptocurrency be the end of traditional financial institutions? Stay with us to find out after this short break.
Hi, this is Cynthia Petian with AWS Mining.
I'm Alexia Hefty-Rossier.
I'm Anand Mohan from Technobrain.
This is Anu Bardwaj from Women Digital.
And you are watching
You're watching
Crypto TV Plus.
Crypto TV Plus.
Crypto TV Plus.
Crypto TV Plus. Stay tuned.
Great opportunities are presented to us every day. But sometimes we miss them, living a life of regret and what is. Opportunities come but once, or maybe not. Now, a digital money revolution has come to Africa. Wealth is no longer for a selected few. Money has been redefined. Introducing Tatcoin. Tatcoin is Africa's utility token that gives you access to a life of endless possibilities. You can shop, buy real estate, travel, invest, and build wealth. For more information, visit www.abitsnetwork.com.
Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Crypto TV Plus.
All right, welcome back and many thanks for staying with us. In case you're just joining us, this is Inside Blockchain live on Crypto TV Plus. Now, we began with the story of Ripple and the United States Securities and Exchange Commission as Ripple hires 21 lawyers to battle their lawsuit against SEC. And then we moved to Kenya to speak with Muthoni Njogu, on her chapter of the published Blockchain and Cryptocurrency Regulation 2021 by Global Legal Insights. We now move to a key conversation on the relationship between crypto and financial institutions. Now here's just a documentary.
2019 marked a change of trend in the relationship between banks and cryptocurrencies. Historically, the attitude of traditional financial institutions towards crypto assets has been one of doubt, suspicion, and even distrust. For instance, it is well known that it has always been very difficult for companies working in the crypto sector to find banking partners willing to work with them. The first clear sign of change in this trend occurred at the beginning of the year 2019 when JP Morgan announced the release of JPM Coin. The fact is that the same CEO of JP Morgan, Jamie Dimon, in September of 2017 had bluntly defined Bitcoin as a fraud. This change in perspective came at a time of particular difficulty in the price, seeing that reaching an all-time high of about $20,000 at the end of 2017, it had plummeted to just over $3,000 in December of 2018. The following month, there began to be concrete talk of a possible Facebook cryptocurrency, And this news was able, over the course of the following months, to also bring cryptocurrencies to the masses. This Facebook projected triggered a series of consequences that on one hand drew enormous attention to cryptocurrencies from global financial authorities, but on the other made it clear that traditional finance could not stay away. But the main turning point was probably the interest of central banks, both in Bitcoin and especially in the possibility of issuing digital currencies known as CBDC, Central Bank Digital Currency. As a response to the Facebook initiative, the Chinese Central Bank made the greatest progress in this direction, even going as far as to announce the beginning of tests for its CBDC. The European Central Bank followed shortly. While the traditional banking system's attitude towards cryptocurrencies was still very hostile in 2017, something changed during 2018, and in 2019 it began to bear fruits. By now, the initiatives of financial institutions concerning digital assets are numerous, and it is very difficult to imagine a further change of trend that could bring everything as it was before, especially considering the fact that they must have sensed that cryptocurrencies could represent an excellent opportunity for new businesses.
Now, to discuss this, I am joined by Olumide Adesina, who is an investment and financial market analyst at Nairametrics. And we are also joined by John Lombela, a serial entrepreneur, founder and CEO of Axalio. Now, let me begin right with you, Olumide. Cryptocurrency is being promoted as the money of the future. It is believed that cryptos, right, will become the default medium of financial exchange in the nearest future, rendering banks, and current financial institutions obsolete. So let me just quickly get a reaction from you to this. How true can this be, right? And what relationship can we find between these two?
I think found that I don't think crypto is here to reform any industry. I think crypto or blockchain industry will play out like the internet. Don't forget that the internet basically leveraged on building business opportunities and make business more efficient. And that's how the Amazon, with the think of an eye, outmatching Walmart, a long-time commercial juggernaut that led the retail ecosystem. So the same scenario is going to play in the crypto world. First of all, the banks were furious about this asset because, first of all, we need to understand that the banking industry is heavily regulated and has a lot to do with traditional financing in play. And, one of the things many traditional players don't like is disruption, and crypto disrupted their business model at unprecedented level. Don't forget that one of
Okay, Olumide, okay,
yeah.
Okay, yeah, go ahead, please. I lost you for a moment there.
Okay, yeah. So it meant that global players were scared that the entry level for new entrants into the financial industry was much easier, and you could already see that in a lot of fintechs already outsizing these banks. But albeit it may, just like you said, in recent time, the banks are warmed into blockchain. In fact, the usage has attracted so much leading banks. I did the research recently. Over 200 banks around the world have a thing to do with crypto, and that's the relationship with blockchain and other crypto parameters. First of all, I want you to understand that one of the key that crypto solves in terms of for financial institutions is payment. There used to be this old financial way of sending money called the SWIFT network, and that had been monopolized for decades. And just a few years ago, Ripple, a ledger network where transactions could be done in seconds. you can recall, if you want to pay your school fees abroad, it takes you at least, if you are lucky, 3 working days to get your transaction done. But on the Ripple ledger, you can make transaction and within 2 minutes it's cleared. So those are the things the crypto industry brought to the banks, and banks like Santander, Standard Chartered, Barclays have started looking into that. Then if you look at clearance and settlement system, one of the things you need to understand in business is that the primary function of business is revenue and optimizing their profits, and crypto does that for some leading institutions that are already applying to that blockchain in terms of clearance and settlement systems, because it helps in reducing all these middlemen that comes into processes, and also reduces bottleneck and backlogs. And that is why you can see that there are a lot of pace when it comes to the pace is much better than bureaucratic transactions. Also, you should not just banks benefit from these. Investment banks and the hedge funds also. One of the things you need to understand that in the ecosystem, how investment banks raise funds are by issuing securities, or what you hear initial public offer, when firms are planning to go to the stock market just to raise capital and pushing their business. Now we can see that we have tokenized traditional securities, meaning that stocks can be traded on the crypto, on the blockchain, and that is so efficient because I recently traded some tokenized stocks on a leading crypto exchange, and I found it was 5 times cheaper than the traditional stock exchange. So I think in the area
that's the reason.
And you should also talk about the major one in finance and trade finance. One of the things financial institutions use their existence, their primary existence, is to provide support to the global economy. And how you do that is by giving credit to businesses and supporting their transactions. Block crypto will help in that in such a way that all the paper, for example, if you want to export something from Nigeria to Ghana, if you are going through the Nigerian custom, usually it's a bottleneck. In fact, a lot of people have been discouraged to even go. They have to go through third parties, and the process is so much paperwork. So crypto solves that idea by streamlining the process and ensuring transparency, meaning that you are less. It's almost impossible to corrupt the system because humans are reduced. The number of humans are reduced, and also it brings better efficient to trading practices. So you see that banks are recognized that the crypto industry will help. And if you look at prevailing precedents, Japan and United Kingdom have shown the lead in crypto adaptation in regards to adaptability, and you can see that there have been better efficiency at that. So it's still new, but with time it's going to be the mainstream. Thank you.
All right, thank you so much, Olumide, for giving us those details. Now, coming to you, John, I believe that one of the biggest threats, perceived by financial institutions, among the many problems, or let me say loopholes that Olumide has mentioned, and even regulators as well, is the issue of anonymity. Now that cryptocurrency transactions are completely anonymous, and nefarious characters could take advantage of this system, notably for money laundering, basically. Now, my question is, how can this be managed, right, in a manner that promotes the financial inclusive capabilities of cryptocurrencies?
Well, thank you very much, Tony, for bringing me on this show, and I really appreciate it, and saying hello to your viewers as well and listeners right now. It is a privilege for me to be on this show and talk about the relationship between crypto and financial institutions. First of all, one of the things that we all have understood with regard to Bitcoin and cryptocurrency is the fact that it was built to prevent transactions to be known to the public, right? So the one fundamental thing we have is that specific public ledger that allows us to be able to see, first of all true transparent transactions right there. And I want to say to the viewers right now that I'll bet to the public belief that, this is all used to promote money laundering and to promote anonymous transactions to actually go through right there. The one thing that financial institutions should be able to do is that, remember, we have this entire KYC, know your customer or know your business capabilities that exist right now. So you will not be able to onboard onto a particular platform without that particular financial institution understanding exactly who you are. So first of all, for every single person to come on board, to be able to transact, whether it is a traditional banking product, opening a savings account or whatnot, and the same thing as well, we see the likes of Coinbase and Luno and things like that. We need to know exactly who the customer is. The reason for us to do that is to comply with international financial laws and also the fifth directive of anti-money laundering that allows us to understand exactly what is the source of your funds and what are you actually doing with your transaction and whether you actually comply with all the various transactions that you're currently doing around using cryptocurrency. So, of course, there will always be fraudsters out there, be it in, using the fiat currencies or even in crypto to try and conceal the transaction. But these guys will not be able to go through traditional banking transactions or anything like that. Mm-hmm. So we, for example, at CryptoVex Capital or even Axalio, we fall in line with all these regulations. We will not be able to provide any financial product on crypto without us having to onboard fully understanding who the customer is or what the businesses are. So until we do that, we will not be able to transact with any specific individual. Of course, the whole financial inclusion allows us to be able to onboard as many people as we can, right? So this is what we see when it comes to traditional financial institutions. And as a matter of fact, one of my project right now, Axalio, is to ensure that we are able to include as many people as we can with regard to financial inclusion. We see in Africa that most people today, the unbanked, are unable to provide the basic requirement, fundamental requirements when it comes to knowing exactly who they are. For example, the ID documentation or passport, or even the proof of residency, right? So technology today allows us to be able to beyond just collecting paperwork. For example, we are able to do, visual facial recognition. We're able to actually capture information about exactly who you are, but also to limit the damage of potentially doing dubious transactions around the world. Those who are not fully KYC'd, although we can collect the information, we may be able to allow them to transact up to a certain threshold. I'll give you an example. Let's say you onboard our platforms and you can still do transactions up the level of, let's say, $200 a month or $1,000 a month, right? So that's enough for you to still be able to enjoy cryptocurrencies transaction and all that kind of stuff. But for you to be able to go beyond a certain transaction, let's say the $10,000 mark or even more, we want to make sure that we know exactly, first of all, why are you doing those transactions, who you are, the sector you're in, the jurisdiction you're actually in, and so forth. So if you are unable to provide us with that particular proof, well, then chances are you might not be able to carry on using our product, or you will still be limited to using our product, but at a certain threshold that allows you according to what you are doing, right? So it is, and also the other one thing that I want to be able to mention out there is people think that Bitcoin is fully anonymous. The reality is it is not. That's the reality. I mean, if today I know exactly your public address, okay, that holds your digital currency, and if I run a deep dive chain analysis on that particular chain, on that particular wallet, I will be able to know exactly every single transaction you've been able to do, right? But the question is, how do we now share that information that is supposed to be protecting your identity according to the principles of blockchain technology and so forth? And the public depends exactly on either what you do for us to be able to start sharing information out there, right? So the one thing, and I always say this, Bitcoin was designed by nature not to be controlled, not to be fully governed by third parties, but institutions or companies or consulting companies that actually offer services around cryptocurrencies are the guys that need to be regulated, right? So the repos of this world, the Axalios of this world, the CryptoVex of this world, and also individual traders, like every single one of these people need to be regulated because we live in the financial world that encourages us to share some information, but also wants us to avoid things like money laundering and all that kind of stuff. So we, working in this space and being mindful of this, we shouldn't just, hey, you know what, start collecting data or information about people who are really promoting violence and who are using cryptocurrency for them to be able to start doing, damage to the people out there, to encourage such behavior for them to convert their fiat currencies into digital currencies, because they perceive the notion of, hey, you know what, I want to conceal my money. I don't want the regulators. I don't want the feds to actually go around and see exactly what I'm doing and all that kind of stuff. So we have the sole responsibility, according to the fifth anti-money laundering directives, as well as the international financial law, to prevent these behaviors to happen. So this is coming up on us to make sure that we actually follow the protocols and we follow the regulations around the world, so that we can all back towards a more inclusive financial perspective of both digital and traditional. And by the way, I like what Olumide said earlier with regards to tokenized assets. One thing that we love the blockchain about is we want to be able to promote, to democratize access to these traditional financial products by tokenizing them more and more and more. I'll lead for that. I promote that, and that's exactly what Axalio is all about. The democratization of that, right? I mean, how we want to do so, but at the same time, not only protecting the identity of people, but ensuring that, you know what, whatever we are actually doing around the world is in line with international financial regulation and avoiding money laundering for those who are trying to do that willfully.
Okay,
that's exactly what I can say to that.
Yeah. So thank you so much, John. We're still on anonymity right there, and see, I've got questions, but I'll be coming back to you. Let me just move on to Olumide. Now, Olumide, there is a feeling, right? People are not satisfied with traditional banking services. People are actually craving for more. They want more. What do you think are these reasons, why people are actually dissatisfied with banking operations and its services?
Those buyers are simple. First of all, you need to understand that all the functions of a very good bank cost, the transaction cost, to be able to do cost at a very fast and cheap rate. And if you look at what we just said, some of the costs that prevail at most of our banks or even global banks are quite expensive. Imagine you moving $1 billion of dollars within minutes, and less than $100 max on you can't do that on the banking platforms. First of all, you need a lot of regulatory approval moving such inflows. You need the CBN must be aware certain top because of kind of also it reduces all these middlemen involved, and that's one of the reasons why a lot of people have problems with banking services. That they complain that a lot of people, there are a lot of chains of command and it makes the processes fast on. Another thing you need to understand is that now that we are in the jet age, like I said, speed is another paramount thing. We are used to the buying things online at minutes, and we're used to phone calls, like we said, and receiving mails compared to post offices. So banks across the world are just adapting to such pace, and there's a lot of millennials are still complaining that because the pace at which transactions are done are not impressive at all, and that's because there are other options showing better upsides. Then you should also look at the fact that, like I said, the banking system, although it's heavily regulated and has a lot of sanity prevailing, we still have bad actors, meaning that there are some bad players in the banking industry that sometimes you see that people hack into those systems, and you can see that either people's information are divulged for corrupt use or funds are lost. And that's why a lot of people have a very pessimistic view about taking transactions online. But with the crypto or blockchain, I think that solves, because to date nobody has been able to hack the blockchain, and the ledger is quite transparent, though it's becoming quite expensive to make transactions. That's because of money, but it's still far cheaper than what you see in the banking industry. But I think the banks are evolving, and you can see that, like I said, leading banks like JP Morgan, Goldman Sachs, Wells Fargo, Barclays, Santander are already adopting one form of crypto infrastructure into their industry. And recently, the controller currencies in the US recently approved a crypto bank, because they already understand the efficiency crypto brings to that infrastructure.
Great. Olumide, so before we now start talking about what financial institutions like banks, can actually do to, solve these problems, let me just come to John here. Now, John, you talked about, anonymity, right? And how this is actually one of the problems, or one of the solutions that you're providing at Axalio. Now, how do you deal with the challenges of people who would rather stay anonymous? People who would not want to probably carry out their KYCs, and the likes, because I myself, for one, have used quite a number of crypto innovative solutions like your wallets and probably some other platforms that don't even have KYC. But in your case, customers, users must be able to carry out or fill out, their information. How do you deal with the challenges of people who would not want to do that, but rather they'll just prefer to stay anonymous?
That's a very, very good question, my friend. And undeniably so, the reality is, if you have, look, let me give you an example. If you come into my office and you come with a pile of cash, bags and bags of cash, and trying to ask me, hey, you know what, John, I would like to actually buy into cryptocurrencies. The question, first of all, that I will actually be asking you is, what is the source of your funds, right? So absolutely. How did you manage to get access to so much cash? If you walk up in my office with $10 million, I have no idea actually how you managed to either print that money.
Who you are?
Who you are? Did you print the money? Do you have a business that runs without you having to put money into your bank account? Or do you live in a cashless, in a society that only promotes cash? We live in a financial world today whereby more or less that is literally impossible. But we know, and you and I know that there's a lot of fraudsters still that will be able to bypass that. But for people who essentially run under very strict licenses to provide financial products around the world, they have watchdogs. I mean, Big Brother is definitely watching out there for them to see exactly how are you managing the flow of information coming through the office. How are you handling the people who actually, walking with a pile of cash and all that kind of stuff? The reality is, if I were to collect that cash, the question is, how do I convert that cash to put it into the banking system that would allow me to on-ramp that cash into digital currency, right? So we provide on and off-ramp financial tools between fiat and crypto. But the reality is, for me to interface with a financial institution, I need to have a bank account. Now, for me to interface with a digital or cryptocurrency world, I deal with people who both have a bank account or not. Now, under certain circumstances, the reality is, in most countries, that we'll be able to transact below, I think, for an amount below $10,000 or 10,000 euro, 10,000 pounds. That is still feasible. I can walk into your office. I have a pile of cash, about $10,000, 10,000 euro. I mean, I can still handle that because the local regulations with regard to money laundering and some directives around how we manage to handle cash on a personal basis allow me to handle that kind of money, right? So I will be able to know, okay, show me your ID, show me some type of ID, who are you, your passport, driver's license, where do you live, and things like that, for me to start interacting with you. If you want me to convert billions and billions of dollars or rands or naira into digital currency, that may not be possible. So once again, because we need to be compliant, we need to be in alignment with the regulator for us to continue offering services to the broader masses out there. We honestly need to be in line with regulators. So when it comes to anonymity, look, some people who literally want to remain anonymous, of course, there are certain digital currencies like the Moneros and the Zcash and all that kind of stuff that allow them to conceal the level of the transaction. So you can still procure a huge amount of digital assets off the exchanges or off a certain OTC desk, which is an over-the-counter desk for people who don't want to necessarily go online and purchase that. Or you can also acquire these from folks who certainly have an offline wallet. That essentially will be able to transfer that information onto you. But essentially, how you manage information from the moment you have actually acquired the data or you have acquired the digital currency depends on your level of knowledge and understanding of managing cryptocurrencies, such as those that conceal, that are purposely sort of engineered to protect the privacy. We know that today privacy is such a huge issue. People want to be more private. Yeah. So you have some digital currencies out there that really literally promote the privacy of who you are and the privacy of how you actually do transactions. So you can acquire this data. Okay, you can acquire this huge amount. Let's say you can acquire 1,000 Bitcoin today over the counter. And depending on your deep knowledge and understanding of how you want to manage your digital currency, you can now start using some of these cryptocurrencies to protect your privacy. But first of all, to be on-ramped from fiat currency into the digital world that we know mostly will be either through Bitcoin or Ethereum or some of the other tokens that allow that to happen, we need to know who you are. And from that point on, even if you have onboarded or are actually on-ramped $10 million worth of cryptocurrency, the rest is up to how well do you know how to manage digital currencies, you protect your privacy and manage your funds. There's nothing wrong with that. I mean, look, I can have $10 million in my bank account, but I don't want people to know, and I don't want the bank to actually share information about my wealth. So that still can be protected using cryptocurrency. But how you get to those funds is still a matter of interest. But how you then start managing those funds can.
Okay, it seems. Okay, so it seems we just lost John right there while we're still trying to get back to John. Now, Olumide, let's just backtrack a little bit. Now, in your explanation, you mentioned you highlighted some of the challenges the banks, are having, and you talked about, being heavily regulated. You talked about the issue right there of speed. Now, I just want to quickly ask you, because of time, what can financial institutions like banks, do to solve these issues that you've raised? Some of the reasons why people are dissatisfied with your services. Can you just mention a few solutions?
Yeah, I think the banks are already working on that. Like I said earlier, if you look at leading global banks, we've already started adopting solutions in that regard. Now we can see that the SWIFT network that all been controlling payments for a long period of time seems to have to be under pressure. Other leading blockchain firms are already collaborating with banks, and it's just a matter of time before you start seeing the momentum building up. But I think then secondly, in regards to cost, I think also that has also really trickled down. If you look at the cost of transaction over the years, you have to admit it, the bank are doing well, and still a lot still needs to be done, and that's why the blockchain is coming up with them. Also, don't forget that one of the most important things that we forgotten is that yes, the fact that the crypto industry has a major principle of being anonymous, meaning that transactions are done without the identity. It has a lot of dangers in that, and that's why banks are using a lot of new techs of verifying transactions, because you want to give a terrorist, a drug baron, easy access to such financial advantage. And we shouldn't also forget that the banks also are moving ahead in the use of stable coins. You can see that in recent weeks, two leading crypto banks now, Kraken, Paxo Gold and Kraken, have already started working modalities on stable coins, and that will also help in reducing the volatility that we see in fiat currencies. You know, a lot of people complain that their transactions margins are eating into their operational cost, as moving funds from one place to another is eating up. So I think the banks are on all cylinders in addressing those problems. So basically, all these things that have been highlighted are already in the process. But I think in Africa, we've not yet seen that. Adaptation yet, because Africa is basically conservative market in regards to finance. So I think in the coming years we might see such change. But for now, I think the Western countries are already leading and offering such solutions. Thank you.
All right, so thank you so much, Olumide. Just to get your final thoughts on the program, looking at cryptocurrency and financial institutions, let me just quickly get your prediction here. I would like to put you on the spot. Where do you see this economy, this ecosystem, right, in the next 2-3 years?
Good question. The blockchain would definitely disrupt the banking system. I see a lot of banks going under. I see a lot of traditional banks going under. Those that can evolve in the process will be kept aside. I also see that banks' value will increase, efficiency of those will be improved in so much, and I see operational costs reducing, trickling down, because fewer people will be in the banking system. Don't forget that one of the advantages of blockchain is that most of their transactions are automated and reduces middlemen. So labor, in regards to labor, will reduce and better reformed. And I also see that more blockchain technologists, more computer scientists will be in the banking industry than the traditional accountants, banking and science students you see presently. So the future for the finance industry is blockchain, definitely, and the revolution has just started. Also, to round up, I also see certain crypto assets will be used as a safe haven currency. And looking at Bitcoin, for example, you can see that in recent time it has risen from $20,000 to about $41,000 in the twinkle of an eye, and that's just to tell you that a lot of institutional investors are going in, and not just institutional investors, leading financial firms. Like if you talk about MicroStrategy, the leading business intelligence firm in the world. If you talk about Mass Mutual, an 18th century insurance firm. You also talk about Square, a payment processor owned by the Twitter founder. This is just and many more. Then not forgetting the popular hedge fund billionaire Portugal Jones that has a stake in Bitcoin. So I think it's just a matter of time. We also see leading banks putting in stake as to hedge against inflation and stuff. But amidst all those promises, it just shows that a lot is going to happen in the ecosystem. Thank you.
Oh, interesting. All right, thank you so much, Olumide, for speaking with us on the program. It's quite a bit sad because we're trying to connect with John Lombela there just to get his final thoughts on the program, but it seems we're not going to be getting his final thoughts. Don't worry, we can always get that from the comment section of the channel that you're watching this program from. It's actually been nice and great talking with you, Olumide. Thank you so much. Do have a great day. Oh, great. And that will be all on today's program. You can get more market updates and all the happenings within the world of blockchain and cryptocurrency on our website, cryptotvplus.com. Follow us on social media at cryptotvplus to get daily info on our programs. If you're watching this program on YouTube and it's probably your first time of stumbling on this channel, don't forget to hit that subscribe button so that you can always get notified or notification whenever we go live on any of our programs. Thank you so much for staying with us. I am Tony Obiajuru. I'll see you next week. Until then, keep trading and keep taking profits.
this is Cynthia Petian with AWS Mining.
I'm Alexia Hefty-Rossier.
I'm Anand Mohan from Technobrain.
This is Anu Bharadwaj from Investing Women Digital.
And you are watching
You're watching
Crypto
TV Plus.
Crypto TV Plus.
Crypto TV Plus.
Crypto TV Plus. Stay tuned.
Hi, I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain show, only on Crypto TV Plus.